You come in today after last week's sell-off where the S&P had its worst week in 2 months. What do you do?
I think we're having a bit of a sort of policy-induced sort of growth scare, obviously. The speed of the backup in bond yields is clearly, I think, concerning people, actually more than the level per se. I think you need to be, reasonably defensive here. With these longer duration sectors, I think, with global PMIs gradually rolling over, equity volatility, which we've said for a long time has been too low, picking up, putting pressure on cyclicals. I think these defensives, which are very out of favor, where we're beginning to see positive earnings revisions, that's the sort of place I'd be looking. I continue to think the U.S. looks very good here as well. You've had a pretty significant multiple derating, earnings up 25%, markets up less than 10. That's a pretty big multiple compression. Yeah, we're going into earnings. I think we're going to get another sort of 20% earnings season here, and a lot of downside support actually from buybacks, and U.S. equities just being very, very domestically focused. So own the U.S., but be reasonably defensive.